Madhu Kela from Reliance Capital now joins us to tell us what he made of the budget this time around. Madhu, many thanks indeed for joining us today. What did you make of what the finance minister had presented today?
Yeah, I think I would say not better than expectation. So first qualification is that even though there are a lot of firsts in this budget, by and large there are no negatives. So as they say, a lot of time no negatives are big positives. So this is a positive budget, I would say. The finance minister has actually tried to address all sections of society and their issues and the problem. So if you look at, let's say for instance, the real estate sector, the affordable housing sector within that, then the rural sector which is been struggling for last 2 years, the farm sector, the infrastructure sector, I think there are lots of good things and lots of good incentives which are being given, and at the same time he has kept the fiscal deficit at 3.2%, which again is very good and argues well for lower interest rate during this year. The big fear regarding capital gains tax, and that will be tinkered into, even that is being addressed. So by and large, I think from a budget perspective, very, very positive.
Madhu, what does this mean for the financial markets? What are the implications? Do you expect this budget to offer fuel to take the markets higher?
Yeah, I think so. But budget on its own cannot take the markets higher, and it has never taken the markets higher or lower. Now we are back to the other nitty-gritties. So what happens in the global markets? What does Mr. Trump do? What is the geopolitical situation? And there is a lot happening there. Let's not forget that there is so much being talked that we feel that how much of that is going to actually materialize. And I think right now the US is doing it. At some other time, some other countries will do it. So we have to watch the global events very, very carefully. And of course, we have to watch how much more money comes from the local investors, because equity being the only option. So these are the two things which will decide where the markets go, apart from the earning growth, which one would like to look at from a market perspective.
I was going to ask exactly that, Madhu. What about capital flows? Are you confident that you're likely to see greater capital flows both from the domestic investor and the foreign investor?
I think right now, you saw the dollar strength has got weakened. The dollar became really, really strong, and that has got weakened. So emerging markets, by and large, which we are seeing a lot of outflows. There has been some inflow across all emerging markets, and of course India also a lot of selling which was happening of foreigners. That has stopped, and in a few days we have seen positive flows. Domestic money continues to come. There is a 4,000 crore rupees of stable domestic money through SIPs in mutual funds now. So that I am sure will continue, and over and above that we continue to get some net flows. So flows are positive. I think the budget, which could have been turned out to be a negative event had the capital gains and all being introduced. So that hump is over. So now I think we are in for good times.
If you talk about specific sectors, Madhu, which sector do you think has benefited the most? Have you had the opportunity to review any of those sectoral views that you had after this budget?
So I think anything which is relating to economy, basically, barring the IT and the pharma sector and the FMCG sector, a lot of these sectors where the ownership is significantly underowned. Let's say, for instance, in the housing finance sector, if there are companies which are only specifically targeted towards constructing affordable housing, they will be big beneficiaries of this budget. Similarly, people who are operating in rural India, they will be big beneficiaries. So we'll have to still do our work on the earning models and the implication of all these proposals. But I would say economy-related stocks, by and large, including financials, will be big beneficiary of the budget.
We've seen bonds gain after the government announced the borrowing program will be much lower than expectations. What is your outlook on that? And do you expect money flowing in on the debt side a little higher?
Yeah, and if you try to see the fine print, they have also tried to make a lot of adjustment that the saving actually should move to financial assets. So there has been a decent amount of money being made in the fixed income. And this year again looks pretty decent because we can already see with the demonetization also a lot of cash is there in the banking system, and that should argue for reduction in interest rate over these years. So fixed income logically should do well even this year.
Was there anything in the budget that you were expecting that did not happen?
No, the only thing is the bank recapitalization. I would have expected that that should have been more than 10,000 crores. So that is one issue which is not been addressed. And I would have expected on the job creation, even though the government has done on the Mudra through the Mudra fund, but I would have expected some more incentive for job creation, which actually remains a problem. But we'll have to see fine print if those issues are being addressed.